Okay, so let's get moving. Thank you so much for everyone joining our investor room. I'm Marie. I'm here together with Melalita, my colleague at Antler Nairobi. For those of you that don't know Antler so well, we are a global early stage tech venture building. We bring together talented individuals, ideate together, and basically launch and build exciting companies in the technology space. We are present across the world. We have funds and programs in 14 locations where we build startups. We've worked with around 50,000 founders over the last year, where some of them participated in the programs that you can see we run here across the world, including Oslo, where we have presence as well. Every fund that we have invested in the startups we build, and to date we've made around 174 investments. We're very excited to be here today to basically share with you 4 of the startups that has been created out of Antler Nairobi, which Melalita will give you a quick introduction to before we run into what will be an interesting round of different pitches today by the founders of these companies.
We're happy here to be here with you today with the 4 portfolio companies from our first round of investments. We have here Roy Njoka from Digiduka, a startup which tackles the issue of providing affordable digital solutions in the payment space here in Kenya. We also have Amara, CEO of Aini Health, based out of Nigeria and working on a point of need credit facility for Nigeria. We also have Sood, CEO of Chapago, who will talk to you about their startup, which connects FMCG wholesalers directly with shop owners in Kenya. And finally, we have AI Fluence and Nelson, who are working on bringing brands closer together with relevant influencers for impactful and measurable campaigns, again, starting out of Kenya. Each of our startups today will have 10 minutes each, and they will present for the first half of their time, and for the remainder of the time, they will be happy to take your questions or any discussions. If you have any questions, please leave your questions in the chat, and they will get to them whenever they are ready after their presentations. And yeah, and so without further ado, back to you, Marie, and the startup.
Yeah, Roy, I welcome you to the stage to share Digiduka.
Hello, we're Digiduka, and our mission is to bring informal retailers into the digital economy. Now, Kenya is a country that practically invented mobile money, and it all started with the launch of Safaricom's M-Pesa in 2007. Since then, we've grown to effectively 100% penetration, with practically every adult owning a mobile money account. There's also the fact that nearly half of the country's GDP flows through mobile money. My name is Roy Njoka, and I grew my career over 10 years in the telco industry, where I was previously able to grow the M-Pesa built payments product by 40 times in 18 months. I also worked with Telkom Kenya in launching their mobile money proposition, T-Cash. And so when I joined the Antler startup program a year ago, I met Lovell, who also has a telco background, though from a complementary tech development background. He's now my co-founder and CTO, and has previously created innovative startups, innovative solutions for MTN and Vodafone, while building 2 successful startups. He's also done award-winning work for brands like Google, Microsoft, and the Bill and Melinda Gates Foundation. And so we came together to form Digiduka because having built and grown mobile money systems before, we recognize that there's still a huge digital divide for up to 70% of the people who can't afford the high transaction fees of mobile money. Now, isn't it strange that in a country that invented mobile money, up to 98% of payments at the informal retail trade are still made in cash? Well, that's because informal retailers and the low-income consumers that they serve tend to avoid the high transaction fees that come with mobile money of up to between 5 and 9.5%. And so we felt it's important to get these segments transacting digitally because of the convenience, safety, and access to formal credit. That's why we created DigiDuka, an affordable digital payments platform to convert cash users to digital payments. Having worked inside Safaricom myself, I know that the big incumbents are not able to serve these segments because they have no incentive to lower their fees for a product that delivers up to 30% of their EBITDA margin as a telco. So therefore, our platform basically, if we look at what we do today, is our platform basically aggregates essential digital services such as prepaid power tokens, internet and TV bill payments, as well as bus ticketing, and even government payments through the local kiosk. So all these payments are now available to cash users through a local kiosk. Our business model means that we make it cheaper for end users to pay through our platform while giving kiosks access to a new digital inventory. Now, this ecosystem brings benefits to everyone, including the electricity provider, as an example, who gets access to a nationwide network of up to 75,000 neighborhood retail locations. The kiosk owner, on the other hand, gets to earn up to $250 more than they do today with access to this new inventory. And the end consumer gets to save on transaction costs by up to 70%. Now, the reason that we're able to offer consumers lower transaction fees is because the digital service providers we resell for are providing a commission, which is what we split with the kiosk owner as a revenue share. We have selected to use kiosks to drive the initial consumer awareness and adoption. But in the future, consumers can settle the bills directly on their phone through a consumer app in a direct consumer play. Now, and so for kiosk partners such as Mamji, this has translated to an extra $100 a week in new revenue that she didn't have before. She also saves time that she would have otherwise have to use to go and source for physical inventory, such as airtime scratch cards. While her working capital has also reduced from an initial $90 a week to just $10 with DigiDuka today. Now, DigiDuka also allows her to accept mobile money payments for free, so therefore removing the friction around the transaction fees. Looking at our performance over the last 6 months, we've experienced amazing growth, where we've been able to, and this has really validated our go-to-market strategy and business model. Looking at what we've been able to achieve, we've been able to bring on 3,200 new merchants onto our platform, who've so far transacted over $100,000 in transaction revenue. Our Android app also have been received very well, with about a 4.9 star rating out of 5 on the Google Play Store. Through acquisition tactics such as outbound calling, SMS campaigns, we've seen that we are able to drive word-of-mouth referrals. So going forward, we really want to launch a referral incentive campaign to further leverage these kiosk networks and really bring more users onto our platform. We'll also explore other digital marketing channels and further develop partnerships. These are partnerships such as the one we have with TechnoServe, which is an international NGO that looks to build capacity amongst kiosks. And basically, we're working together with them to introduce the 10,000 users that we have onto our digital payment platforms that allows them to accept digital payments, as well as get access to digital services we sell. Now, we're also excited about a new partnership that we're developing with Facebook, where we'll be able to develop an e-commerce solution to enable kiosks get their inventory online through Facebook platforms. We got our start during the Antler program with startup investment of about $100,000. And with this, we're actually on course to be able to recruit 6,000 new kiosks, transacting over $150,000 by the end of the year. We're now seeking to raise seed investment that will enable us to acquire a further 30,000 kiosks within the next year. and transacting over $4.5 million in transaction revenue. This will set us up to be able to raise our Series A fund in the next 2 years, at which point we want to be able to bring on 70,000 kiosks and transacting a total of $190 million. Now, our ambition in the next 3 years is to be live in 5 countries, delivering digital services to over 10 million users through a network of about 150,000 retailers. So these 5 countries are Kenya, where we've started, and then going into Ghana, Uganda, Tanzania, and Rwanda, where we see a similar opportunity. Thank you.
Any questions for DigiLuca? If someone in the audience has anything they would like, feel free to use the chat before we move on to another team. Okay, there's one question for you there, Roy. Can you see it?
Okay, yeah, so I can see a question from Brad. So how soon do you expect to launch your next operation and in which country? So that's a great question. So we're looking to launch in Ghana, which is our next target country. My co-founder is actually from Ghana. And we see an even bigger opportunity than we have in Kenya. So we expect to be able to launch in Ghana within Q1 of next year. Okay, so I can see another question. The 4% transaction fee to the service provider is then passed on to the user. So no, so we have 2 main sources of revenue. One is the commissions that we get from the service provider. In this case, in this example, it was the power provider. So that's one source of revenue. Then we also have another source of revenue where we charge a small transaction fee to the user who comes to the kiosk to get the service. So this too is what we are able to now share as a revenue share with the kiosk. So 4% is one source of revenue, and then there's a small transaction fee that is typically between 50 and 70% cheaper than the existing mobile money providers to the end user. Yes, so I can see a question from Abubakari in Tanzania. Yes, we are definitely open to partnerships. If you're a distributor, if you want to become a reseller, our email address is on the screen, hello@digiduca.com. You can also reach us on LinkedIn or any of the other social media platforms. We're happy to open to new partnerships. Yeah. So Salam has asked, what's the most exciting thing to happen to our business so far? I think for me, I'd say 2 checkpoints. Number one is being one of the 4 companies that actually got selected as part of the Antler program. It was the inaugural program, and we are very happy to have gotten our start there. So that was the first exciting thing. The second exciting thing was actually as I was looking through the support questions. There's a user who actually wrote to us just to say how we've really transformed how they do their business. I didn't expect that to come through the support, and that actually lifted my day. I can remember the day that I got that to come through. So I think those are the 2 things, because it really means that we are actually delivering a service that's really relevant and it's making a difference. Okay, so I can see a question from Benedict. Could you kindly deep dive into the user and what edge does DigiDuca provide? So if I paint a picture of the situation today, think about your typical low-income consumer. Let's look at 2 typical use cases. Number one, if they want to buy electricity tokens, prepaid electricity tokens, or pay their bill today, they have one of 2 choices. One is to incur a high premium through mobile money, so you pay up to 10% in transaction fees. or you go out of your way to find a banking hall that will accept cash. So in one case, you either you pay a lot of money for the convenience of mobile money, or you go out of your way to find a place where you can pay in cash. Now, with Digiduka, we're looking to solve both those problems. Number one is we're making it easier for you to pay by immediately slashing the transaction fees that you pay. So typically between 50 and 70% less than you would pay with mobile money. And number two, by simply walking to your nearest kiosk rather than going out of your way to find a point of payment, we've aggregated all these digital services through your local kiosk with whom you already have a relationship. You probably already go there every day. So those are the two main things we're delivering. Lower cost while still maintaining convenience. If I take another use case, for example, like if you wanted to buy a bus ticket, usually you would have to find your way to the bus ticketing office and probably queue depending on what time of the month it is. Now with Digiduka, you simply go to your nearest kiosk, you give him your destination details, pay, and he will be able to do that payment immediately. So that's just painting a picture of the front two in terms of what the situation is like today.
Okay, thank you so much, Roy. Unfortunately, I have to cut you here because of time, but clearly there's a lot of excitement around Digiduka going on in the chat. Melalita has just posted the contact so that in case anyone wants to get in touch with you further to learn more about Digiduka, what you're about to do, and also your fundraising round, please get in touch with Roy using this email.
All right. Great, and happy to be here. Thanks.
Great. The next founder I would like to invite on the stage is Amara, who runs a company called Aini Health out of Nigeria. So Amara, the stage is yours.
Hi, good afternoon, everyone. My name is Amara, and I am the CEO of Aini Health. Aini Health is a point-of-need credit facility for primary healthcare. Our passion is to bridge the gap between access to healthcare in Africa. Let me paint you a picture. A hospital with a toddler, and after getting care, if the parents can't afford to pay, both child are detained at the hospital, or in most cases, outright refused care. Because these hospitals are not built to be detention centers, these patients are essentially held in the same space with patients who are currently receiving help, guaranteeing that they will leave the hospital with way more than they came in. This is a current occurrence in my country, Nigeria, with over 200 million population, and about 90% of us don't have health insurance coverage. You can expect that this is a common occurrence where primary healthcare illnesses such as malaria have led to people dying. Only if these people had access to proper healthcare, this would have been avoided. Now, this is where we come in. Our solution is a mobile-based point-of-need credit facility for primary healthcare. Our target audience is credit-worthy, unemployed, earning a salary between $100 to $300 every month. But by the time they prioritize feeding, housing, transportation, and other domestic care, they are not prepared for the financial shock which health expenditure will bring, because health is usually number 5 or number 6 on the list of their expenditures. But we are there at the point of need, branding the hospital where we connect with the patients right at the hospital to offer them our solution. And in 3 easy steps, patients can connect with us by downloading our mobile app, entering the basic information. While working with our credit verification partners, we verify them and qualify them for a loan. And once the loan is approved, the money is paid directly to the hospital. It is worth mentioning that somebody that is not sick will not find us attractive, because every single payment that we make is paid directly to the hospital's bank account, ensuring that 100% of our investment is going directly to healthcare. And what this does is that it reduces our exposure and ensures that our default rate is better controlled, thereby leading to a lower interest rate for the borrower that is on our platform. The hospitals are very excited with working with us, and what we have seen is that they are willing to pay a one-time facilitation fee for every patient that we pay for their hospital bill at their hospital. What this has done is that it has further reduced the interest rates that we're offering the patients because of the excitement from the hospital and their willingness to pay a facilitation fee. And then the patient has the convenience of getting care, leaving the hospital, and then paying us back over a 2-month period. And this is looking at an average healthcare cost of about $40, which will cover both consultation fee and basic screening test. Our unique positioning guarantees that we sit at the hospital connected not only as a mobile lender or a fund that is focused on healthcare, but also as a only provider sitting at the hospital and connecting with the patients directly at their point of need. Our milestone so far starts with our 100,000 investment, which we got from Antler in February of 2020, which has allowed us to develop the product. And on the 28th of September last month, we launched our product piloting with 3 hospitals. Our target is that by the end of Q4, we would have piloted this product, having given loans to 100 patients and using a loan book of $4,000. What we're hoping to learn from this is how the patients interact with our product, which will allow us optimize our product and then further hopefully reduce the interest rates that the patients pay. Our target by the end of Q1 2021, is to have closed our seed round of $300,000 in investment. What this will do is it will give us well over 18 months of runway, having served 10,000 patients and working with 100 partner hospitals. The hospitals are very excited about this product because we are solving real problem for them. And currently we have 25 hospitals in the pipeline, 10 of which we have signed, but we've onboarded only 3 now. We are the ones gradually onboarding the hospital because we have reduced our loan book. So we want to make sure that we're properly placed to address all the supply, all the demand for financial access that will come from the patients from these hospitals that we're currently working with. When it comes to healthcare, the way we see healthcare is not a one-time thing, it's a long-term view for us where we change lifestyle. So which is why we're entering with our entry product, our point of need credit facility for primary healthcare. But by Q2 of 2021, we will add 2 products. The first one is an on-the-spot insurance coverage where we will work with multiple insurance providers, offering patients the option to convert the loan that they get from us into on-the-spot insurance coverage. What this means is that should they get ill again and go back to that same healthcare for the same problem, their insurance coverage will kick in, and at least their consultation fee is covered, and they will have to pay just a reduced amount of money. What you have done with patients like this is that we have completely changed their lifestyle and the way they view and plan for their healthcare going forward. The next thing we also observed is that the second highest unique group of people that get detained at hospitals are pregnant mothers who go in for emergency C-section. The word emergency already describes it. So what we're hoping to do is to connect with these women with these mothers at the 2nd or the 3rd month of pregnancy, help them plan towards the delivery and save towards it. And then in the unfortunate case that this becomes an emergency C-section, Any Health will be there to cover the rest, and then so that mother and infant will be released from the hospital and they have the convenience of paying us back. We have launched with 3 hospitals, like I previously mentioned, and the excitement with these hospitals gives us good validation for what our product is doing in the space. And we have started our fundraising, and we're very excited to connect with audience and give more insight about our product, our vision, and how we see our product impacting not just Nigeria, but Africa as a whole. Kunle and I have known each other since 2013. multiple products together. Kunle has been a part of digitalizing commercial banks in Nigeria, one of the biggest commercial banks in Nigeria. I built Nigeria's largest online bus ticketing platform. And also, while I was in Jumia Group, running one of the vertical companies, I was able to scale and launch businesses across multiple African countries. So when it comes to understanding what it takes to not only get the partnership and the products working in Nigeria, but also scaling it across multiple African countries, Kunle and I have that covered. Our goal for healthcare is not just for Nigeria, but opportunity to impact healthcare across Africa, not just by giving credit facility, but helping people change the way they plan towards their health. And we're excited and hope that you are as well, and you're happy to join us in this vision to bridge this gap within access to healthcare. Thank you.
Thank you so much, Amara. Maybe if there's a question or two, we can take that before we jump to the next pitch. So there's a question here, I think. Can you see it?
Yes. Yeah, I can see. How has COVID affected our startup operation? What we have seen is that there has been reduced movement at the hospital, but the main aspect of it is that the healthcare facilities that we're working with are more excited, because for them, yes, they are reduced aspect of people coming in, but they see how our products come into place. And what they've done is to ensure that our branding in these hospitals are properly positioned, so that people not only are afraid of coming to the hospital, but people, when they come, they are not afraid of being able to access care. So the effect that it has had is not so much of a negative effect, but of a positive effect, but mainly coming from the partner hospitals that we're working with, because to them, they see more access for healthcare for people that come into their hospital. I see another question. How would I manage credit risk and assumptions to make? Okay, so one of the things that is unique about Nigeria when it comes to fintech is that not only do we have something called BVN, biometrics for every single bank account is linked to the individual that owns it, which gives you more insights into the individual's behavior and links all their bank accounts to one. With the partner that we're working with for payment collection, it allows you to be able to post a payment. Once the patient takes the loan, they authenticate and give you the ability to remind them and collect the payment. So what we're going to see is that our risk will be reduced. And because people can only take loans from our business that go directly to healthcare, we cannot use loans from us to say buy beauty products. It has reduced our rates, and what we believe that's going to happen is going to better help us understand the default rate and then manage it a little bit better. And this is looking at a default rate currently for the amount of loan that we give in this space. The default rate is about 9%, and these are for other lending businesses that lend for everything from electronics to beauty care. But ours is sector focused, and we believe that is going to reduce our exposure as well.
Very good.
There's another one. How long does the loan? Okay. Oh, sorry.
I think I have to cut you off, but it's great that people are asking questions because it means they care about what you do just as much as we do. So Melalite will post the email of yours in the chat, and then I would suggest people get in touch with you offline to explore and learn more. Sorry to cut, but we have to jump to the next one. So I will open up the stage for Sud, who's the CEO of ChapChapGo. Sud, when you're ready, I'll let you take the floor.
All right. Good afternoon, everyone. My name is Sud. I'm the co-founder at ChapChapGo, and what we're doing at ChapChapGo is we're digitizing FMCG retail in Africa. So we'd like you to meet one of our co-clients. Baba John runs a retail shop that's very quintessential of corner shops in Kenya in the neighborhoods. And they work on retailers like this work on a very lean operation. And they end up doing themselves to do all the ordering, they serve customers, they need to figure out how to stock and how to balance their books. So they're really crunched for time. And it's very difficult for them to stock. They mainly have two options. The first option is call a sales rep, but the sales reps are very limited to the brands that they're able to offer. So they have to call multiple sales reps just to stock out their store. And what in doing this is the sales reps manually key in orders, the orders mistakes every so often. The price information isn't directly sent to him, and he's always surprised with price differences. And the second option is for Baba John to go to the Central Wholesale District, which in Nairobi is in a place called Eastleigh, and procure products from there. So he does get good prices there, but then he's not guaranteed of supply, and it's a very difficult process for him. As you can see in the crowded street there, that's where these wholesalers operate from. They're mainly concentrating on selling, pushing volume, so they struggle to find new customers. Every now and then they also get stocked out, so they end up losing customers like Baba John, and customers find it very difficult to work with them. And that scenario there is an operational and logistics nightmare. So this is where ChapChapGo comes in. What we are doing is connecting the wholesalers who themselves are aggregators, so we're aggregators of aggregators, sorting out the variety issue, and opening them up to retailers like Baba John and other bulk buyers. Through this, we're able to provide real-time pricing and discovery, super fast and convenient ordering, and integrating with the logistics to solve the last mile and half mile problems. Our product is very simple. We have multiple interfaces to link up to the different types of Baba Johns out there. And we collect the orders, pass them on to the retailers, pass them on to the wholesalers, transact, make sure that the transaction goes through. As you've heard, Kenya is the home of mobile payments, and very easy process for both sides. So for retailers and people like Baba John, we're getting them very good pricing. We are processing the orders much faster. It's a very simple experience. They no longer have to make multiple calls just to follow up on simple orders. We're also giving them a platform to ensure that they always have stock. And with the data that we're collecting from their buying habits, we're ensuring that it will help them open up to financial service providers that can give them more credit. And this has an impact to increase their businesses, their sales, and allows them to be able to plan forward to expand their businesses. For the wholesaler side, we're giving them new customers. We're making the operations and streamlining the operations, putting in technology to do things like predictive stock management so that they don't run out of stock as well. And most importantly, the data that we are collecting from them is we're also opening it up to financial providers to be able to provide them with supply chain financing. The market is big. It's a $1 trillion industry in Africa. In Kenya alone, it's $31 billion. We want to work with the top 50% distributors and wholesalers. This is a business worth at least $15 billion and growing. This is a perfect time now to get into this industry because, one, mobile phone technology is pervasive across the country. There has been a move to get into digital commerce that's been accelerated now with the COVID-19 crisis. Distributors want to get tech-enabled, they just don't know how to, and they don't have those resources and skill sets. And lastly, there is an emergence of tech-enabled third-party logistics providers. This makes it very easy for us to integrate the logistics function. So we compare with our competition very efficiently in the terms of our business model. What we're doing is, our model one is asset light, so we are not controlling the inventory. We're offering much more variety to the typical buyer and doing the price discovery for them. Secondly, this allows us to get a much bigger footprint of our operations much easier than our competition, because even the tech-enabled competition right now, they still run brick and mortar operations. So for them to move from one city to another city is very difficult. So we are solving that for them we're solving that for the market using existing infrastructure that's already there, but people just don't know that this is the best wholesaler in this particular town or country, or region. Solving the delivery speed will have much bigger variety than most of the wholesalers because we're aggregating aggregators. Obviously, by aggregating aggregators, we'll be able to filter out where is the best pricing and giving that very simple ordering interface to our customers. Our business model is very simple. We're charging the sellers a commission on transactions. Eventually, we'll also open up advertising, and we're also planning an enterprise play using the data that we're collecting both on the buying and selling side. This is a business model that has been validated elsewhere. Recently, a similar platform called Gudang Ada was launched in Indonesia, and they managed to raise $35 million in the seed round. So over the last 7 months, we've operated a typical quintessential wholesale shop by actually managing the stock ourselves, just to get a feel in terms of how the market operates and how difficult it is for both parties to kind of meet together. So through this, we've processed 3,000 transactions of a value of over $110,000. We are seeing 33% month-on-month customer growth. We have over 20 brands in our portfolio, and some of the wholesalers that we've been working with are now earmarked and already in talks with them to onboard them to list directly onto the platform. We've served our core segment of users. We have more users than this, but our core segment of users is retailers and bulk buyers. We have over 250 of them. We are seeing 50% retention for this segment, which is much higher than the 33% in the industry average. And we've also served over 4,000 families. So the growth is going to come from obviously growing the marketplace. And because it's a marketplace, we have to grow both sides. So we're looking at digital media campaigns. We're also strategically going to have relationships with key distributors to unlock their suppliers. To unlock their distribution chain and wholesalers to onboard them onto our platform. Looking at referral programs on the enterprise side, we'll have a business development function, and we'll have free product trials for subscriptions. What we are seeing, because we are asset light, it's going to make us very easy to expand to different geographies. Our roadmap, we're planning on raising $300,000 for our seed round. Most of this is going to go into sales, marketing, and business development, but also to beef up our tech so that we can operate in multiple locations in Kenya in time for a Series A, where we hope to raise to be able now to build up our enterprise competencies and go for the data and platform play. I met Amin while working at Al Jazeera, so he's my co-founder and CTO. We worked together on multiple projects while at Al Jazeera, serving different markets, scaling to millions of users. We both have experience in product management. Amin is more hands-on the technical side. So he does most of the development and has a lot of experience and a proven track record for that matter. I have experience in business development, working for a local digital agency in Nairobi. Our first hire, Kevin, is ex-Jumia. He was critical in the formation of JForce, which is a field acquisition program, vendor acquisition program. He also has fantastic experience in operations and warehouse management. So we'd like you to join us in leapfrogging African retail to the 21st century so that we can get the hundreds of millions of Baba Johns out there who dominantly control retail trade in this market, in the continent, to be able to get them to serve their customers properly, and most importantly, to be able to give them a platform to enable them to focus on their business, to grow, and to provide more value to the communities that they serve.
Thank you so much, Saud, for that. We're a little bit short in time, I'm just noticing, so we will probably skip the questions for this round, but Melalita will post the email for ChapChapGo and Saud, so you can get in touch afterwards and learn more. With that, I think I will hand over to our last team of the day, Nelson, would you like to join the stage and share iFluence?
All right, great. Good afternoon, all. Very excited to introduce you to iFluence, which is Africa's first influencer marketing platform that's driven by artificial intelligence. Our precedence is that people are the new media companies. Influencer marketing is the fastest growing and one of the most impactful channels today due to the growing ad blocking movement and that key demographic are not spending enough time in front of the TVs. So marketers have realized that their customers actually trust recommendations from people they follow and trust. Despite this being a very valuable channel today, marketers across the board have experienced major pain points across this, which include finding the right influencer with the right key demographic and with a brand affinity. Managing these influencers is also a problem, but most importantly is the measuring of impact out of these influencer marketing campaigns is a huge problem. Enter iFluence, where we are using and have integrated AI into the core of the very substance that we do, where we accurately match influencers to brands, manage end-to-end campaigns, and most importantly, we bring transparency in the measurement of impact. So we are in a rapidly growing market where last year's figures stood at, in terms of global advertising spend, it stood at 560 billion, with 10 billion being spent in Africa. And a survey across the globe showed that 17% of marketers surveyed have spent over 50% of their advertising budgets on influencer marketing. Why now? I think the industry is, the stars are aligned towards the industry in terms of looking at the consumers, where 71% have said that they are more likely to purchase based on social media influence. The marketing industry, the influencer marketing industry is growing rapidly. Last year, the numbers stood at 6 billion, and this year we are looking to close at a strong 10 billion. And then most significantly is the cost to advertisers in terms of ad blocking. So this year it's projected to end at about 78 billion, which is huge, it's significant. Let me take you under the hood so you can get a feel of how we do this. We use an audience-first mechanic where we integrate AI to be able to understand the psychographics, behavioral analysis of the target audience to better understand their needs and be able to extract influencers who could actually impact this audience quite impactfully. Next stage, we're able to extract the influencers, and then we are able to conduct further audit and filtering to ensure that we are able to find influencers with a brand affinity, with a high emotional connection to their followers, and ensure that there is brand security to ensure the brand remains secure at all times during the campaign. And then it's at this stage where we are able to predict the efficacy of a campaign to such a point where we eliminate the risk to brand marketers, and also we are able to demonstrate the ROI even before the campaign begins. The final stage is where now the human element is introduced in terms of, in form of creator success managers. These are the influencer relationship managers who mentor the influencers throughout the campaign and are also continuously measuring results in real time. To date, we have identified 1,200 influencers for our current clients. We are uniquely placed to take over the continent in terms of we are the first platform to accurately match influencers to the target audience in Africa. We are the first fully automated end-to-end influencer marketing platform. We are also the first to be able to deliver across the entire metric funnel. We are also the first to analyze African languages, including slang. We are the first to integrate and manage campaigns on WhatsApp and Telegram. We are the first to bring transparency in the measurement of impact. Our business model consists of 4 offerings. The first one being awareness campaigns, where we drive community outreach and social behavioral change campaigns, which are mainly targeted to government aid agencies and NGOs. The second one is brand campaigns, where we drive awareness campaigns on products and services. And then we have lead generation and conversion, where we drive sales. And then we have the SaaS model, where we place the power of our platform in the hands of our customers. To date, with the pilots that we've run and the campaigns we've been running, we've seen that we share between 20 to 30% of our revenues with influencers, and therefore our contribution margin is around 70%. We are a young company, and our traction speaks for itself. We were formed in December last year. That's when we incorporated our Delaware entity. Our MVP was ready by end of February. We went live in March, just in time for COVID. But despite the circumstances, we've been able to close the largest telco in East Africa, the largest airline in East Africa, one of the largest banks in East Africa, and as well as large government agencies such as DFID and USAID, as well as NGOs. Our go-to-market strategy consists of 3 verticals, where we have government and NGOs. This was actually a really unanticipated, but now a high-value growth segment brought about by COVID, where we discovered an extra use case. And we've seen that they're very well funded. They have multi-country scope, they're fast decision-making, and really long-term client potential. So we have very strong relationships currently with DFID and USAID, and high priority targets right now is IFC and the UN, where we are already in discussions. The next is brands, where we target large multinationals who can roll out campaigns in multiple countries and have the budgets to deploy influence to the full effect. Our priority verticals are banking, telcos, and FMCGs. In terms of partnerships, with our really fast-growing reputation and visibility, we are increasingly being approached to pitch alongside partners around the world. And to date, we've submitted bids in a subcontracted capacity with agencies, organizations based out of the UK and US. Well, in terms of traction, as you can see for yourself, within less than 5 months, we've been able to close deals worth $510,000, and with $800,000 in advanced stage of the pipeline in negotiations. And we look to close this year strong at $1 million. So it's quite impressive as it's good. In terms of competitive landscape, one of our major advantages over the competition is that we are able to deliver across the funnel metric, where you find that most of our competitors, actually all of our competitors, do not deliver through the entire customer journey, which is understandable in the US, where we have 3 competitors in US and Europe. The 3 main competitors who have AI-driven capacity, they still do not cover the entire metric funnel, because in advanced markets, marketers have access to advanced tools which they can use to measure the lower funnel metrics, while none exist in Africa. So we have taken this advantage to deliver across and leapfrog to be able to gain African dominance, market dominance using that. Another advantage is that we use an elaborate AI-driven system to be able to accurately identify, evaluate, and match the right influencers to brands, while all of our competitors use basic keywords such as to look for influencers or just present a double-sided market to attract both influencers and brands into it without solving any major issue. We have a team of highly competent commercial and technical team, starting with Lamusia, our Chief Operating Officer, who we met about a year ago during the Antler program. And he has a really great background in finance, entrepreneurship, and investment advisory. And he's worked in blue chip companies such as PwC, and therefore looks after our operation to ensure that we have operational efficiency. We have George, who has worked for the leading ad and creative agency in the UK and Europe for over 18 years, leading the new business development with great results. We have Arthur, our Chief Technical Officer, who is 5 years plus globally recognized AI and ML expert, who previously led a tech team that in a startup that was acquired by Google. And then we have myself, and I have over 10 years experience in growing global brands in the sub-Saharan African market, where I have achieved great growth success stories, including like in Kenya, for instance, I introduced Jameson Irish whiskey, which some of you may know about. Introduced it in Kenya in 2012 and grew it from zero to the highest selling whiskey within 7 months, which earned me a promotion into Africa. And they followed up with more whiskeys, where I was able to now, take it, to create more success stories using that. I was using specific brand advocacy and influencer marketing strategies to be able to growth hack into the several markets with really, really great results. And this is the kind of, strategies that we've brought on to our AI platform to be able to use the same strategies, but at scale. We are looking to raise $750,000, which we are currently doing, and this will go towards expansion, where we'll further develop our SaaS platform, and also just to establish and create subsidiaries in South Africa, Egypt, and Nigeria within the next 12 months, so that we can properly create Africa market dominance. And then also some will go towards working capital, hire key talent, and all this we want to use to push the needle for us to get to the next milestone, which will be generating revenues of between $200,000 to $300,000 per month within the next 12 months. Thank you, and I invite you all to join us on our exciting journey of disrupting the African advertising industry and also beyond Africa in the coming few years.
Thank you so much, Nelson. I see we have just passed the hour, which means our time is up. Let me conclude by sharing a summary here of all the startups presented today. Digiduca with Roy, Einhealth with Amara, Sood with ChapChapCo, and of course Nelson as well with iFinance. In case you want to get in touch with Antler to learn more about what we do in Nairobi or what we do across the world to support founders build exciting startups, or if you're interested in exploring some of the Antler funds that do invest in these early stage companies, please reach out to us on the email you see here. And if you would like to get in touch with any of the 4 startups that are currently looking to fundraise and looking for exciting introductions and getting to know potential investors, please do reach out to them as well. I think Melalite will also post in the chat all the contact details. So in case you're not able to write them off the screen, you can also take them from the chat box before you leave. I think that is it from our end. Thank you so much, everyone, for tuning in and for listening. And please get in touch with us after the conference.